Welcome back, awesome people. So if you are here on my channel, that means you want the blunt truth on investments, the real, no fluff, on my personal insights on investments that will add, not subtract, to your portfolio. So get bullish on that subscribe button for the YouTube algorithm and smash all the likes, bells, and whistles to help my channel grow, and to get all my updated videos. And to get all my updates on these fantastic investments, and comment below with what you think, because I do reply to every comment. So as we generally spend a decent amount of time planning for our workday, a vacation, and buying a car, we often forget or choose to ignore the most important plan of all: mapping out our investment strategy and plan. Your investment strategy is like your game plan to building your portfolio, but it is very important that you find the one that's right for your objectives and situation. A 25-year-old should have a different strategy than a 65-year-old. Investing your money without an investment strategy is like a football team going into a game without a playbook. Although they are not required, they significantly improves their chances of winning. Creating an investment strategy should be your number 2 step after you learn some of the basics of investing in the stock market, which you can check out in my previous learning series video, How to Start Investing. So check that out and destroy that like button and subscribe button if you like my hat. So when creating an investment strategy, it is important to quantitatively, meaning looking at numbers, to figure out what you are seeking to accomplish. Stating that you simply want to make money or become wealthy is not helpful. A better objective would be to say, I want an 8% average annual return on my investment contributions over the next 10 years in order to amass $200,000 to purchase a cottage. Now that is a much better purpose. The more specific the objective, the better. And in today's episode of the learning series, I will be highlighting the 4 common investing strategies that suits most investors. By taking the time to understand the characteristics of each, you will be in a better position to choose one that's right for you over the long term or short term. So the first investing strategy is value investing, an investment strategy made popular by the great Warren Buffett. The principle behind value investing is simple: buy stocks that are cheaper than they should be. Value investors are bargain shoppers. This buy and hold technique requires a patient investor who wants to keep their money invested for a few years. If you are planning on keeping your money invested in the stock market for a few years and you want the best source for excellent value stock recommendations, subscribe to my channel and I will be posting all of my value stocks and future value stocks that I will be investing in. Now here's a tip for you value investors. For those who don't have time to perform exhaustive research like us market maniacs do, the price to earnings ratio, or the PE ratio, has become the primary tool for quickly identifying undervalued or cheap stocks. This is a single number that comes from dividing a stock's share price by its earnings per share. A lower PE ratio signifies you're paying less per $1 of current earnings. Value investors seek companies with a low PE ratio, and the message here is that value investing can work as long as the investor is in it for the long term and is prepared to apply some effort and research to their stock selections. Those willing to put the work in and stick around stand to gain from value investing. Now the second type of investing, income investing. The sole objective of income investing strategy is to generate a constant stream of income. The constant income can be in the form of dividends and or distributions. A great way to build wealth over time, income investing involves buying stocks that pay out returns through a dividend or distribution. Dividend paying stocks, exchange traded funds or ETFs, and real estate investment trusts or REITs are just some of the types of stocks that pay a dividend, as they provide a quarterly or monthly income stream and should comprise at least a small portion of every investment portfolio and investment strategy. You can incorporate the income investing strategy with any other strategy, as many growth and value stocks also pay dividends and distribution. Third investing strategy, growth investing. Rather than looking for low-cost deals like a value investor, growth investors want investments that offer strong upside potential when it comes to the future earnings of stocks. An investment strategy that focuses on capital appreciation, growth investors look for companies that exhibit signs of above average growth through revenues and profits, even if the share price appears expensive in terms of metrics such as price to earnings or price to book ratios. It could be said that a growth investor is often looking for the next big thing. A drawback to growth investing sometimes is a lack of dividends. If a company is in growth mode, it often needs capital to sustain its expansion. This doesn't leave much or any cash left for dividend payments. Much research has indicated that value investing tends to outperform growth investing over the long term. These findings don't mean a growth investor can't profit from the strategy. It merely means a growth strategy doesn't usually generate the level of returns seen with value investing. The fourth investing strategy is momentum investing or swing trading. As I said, that's what I'll be doing in 2021. So momentum investors or swing trading are investors that ride the wave. They look to buy stocks experiencing an uptrend and then sell on the downtrend. Think of momentum investors as technical analysts. This means they use a strictly data-driven approach to trading and look for patterns in stock prices to guide their purchasing decisions. Traders who adhere to a momentum strategy need to be at the switch and ready to buy and sell at all times. Profits build over months, not years. And if you want free money to trade with and $0 commission fees that won't eat into your profits, sign up with my WealthSimple Trade link down in the description box, where you will get $25 for free real money to trade with. And you will get these stocks before they go back up. Don't like WealthSimple Trade? Maybe Questrade is more your style? Well, you can also sign up with my Questrade QPASS key code, where you will get $25 of real free money and start trading in minutes. Both links are in the description box below. Now, setting up your investment strategy is like buying a new car. Before you look at the different models, you need to figure out what style suits you best. And just like cars, there are many styles to choose from when creating an investment strategy. When choosing the right investing strategy, there are questions that need to be answered first. What is your investment horizon? What returns are you seeking to achieve? What amount of risk are you able to tolerate? What are the funds in the investment to be used for? Answering these questions will ultimately also help you in building your portfolio. The best thing about investing strategies is that they're flexible. If you choose one and it doesn't suit your risk tolerance or schedule, you can certainly make changes. Now, key takeaways from this lesson. 1. Before you figure out your strategy, take some notes about your financial situation and goals. 2. Value investing requires investors to remain in it for a long term and to apply effort and research in their stock selection. 3. Investors who follow growth strategies should be watchful of executive teams and constantly be watching news about the company. 4. Momentum investors or swing traders. Swing traders or momentum investors buy stocks experiencing an uptrend and sell on the downtrend, and always need to be alert at all times, ready to buy or sell at any given notice. Investing is a roller coaster, so keep your emotions at bay. It may seem amazing when your investments are making money, but when they take a loss, it may be difficult to handle. That's why it's important to take a step back, take your emotions out of the equation, and review your investments with your advisor on a regular basis to make sure you are on track. So again, I am not a financial advisor, so make sure you do your own research and consult your own financial professional. Thanks. The decision to choose a strategy is more important than the strategy itself. Indeed, any of these strategies can generate a significant return as long as the investor makes a choice and commits to it. Remember, don't focus exclusively on annual returns when choosing a strategy. Engage the approach that suits your risk tolerance. There is so much wealth out there for all of us to get a piece of. So by allowing our hard-earned money make us more money is the key to wealth and the key to financial success. So make sure you subscribe, like, and share to help out the channel grow, and so you will get notified of when I go on YouTube live or of my recent posts, as I will be posting my penny stocks, my REITs, my dividend stocks, and speculative stocks from my portfolio and investments that I am currently buying and selling. And also you can join me on my swing trading journey. If you haven't yet, check out my previous videos where I discuss debt and overspending and other thought-provoking videos that will tingle your mind. I want everyone to have an opportunity to get out of this work-life trap by buying back their freedom through investing. So let's all start 2021 together on a journey of health, love, and success. So until the next video, stay ranting.